Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 4th day of March 2020, and this is the Daily Report for Gold and Silver. Just as we saw wild moves yesterday, we saw the reverse of that today. We had a tremendous spike in the Dow, up almost 1,200 points after it going down about 800 points yesterday. $42 move to the upside in gold, followed by a $7 to $8 move to the downside. We are getting these erratic price swings that's indicative of the volatility, and that volatility absolutely comes from the uncertainty of the current crisis surrounding the coronavirus. That will determine where these markets go and how fast they get there. Let's take a look at our price board, and today on our technical studies, we'll talk about why we didn't trigger a buy signal and answer a question that came in from one of our subscribers. First, to the price board. Traders, we did see gold decline. We are looking at price changes in Australia now in their morning session, down 370 at 1639.30. In the morning session, the decline was about $7 on the day. Platinum, in essence, unchanged, but it did move a little higher in the morning session, 875.30. Palladium continues to rock to the upside, 68.80 in terms of net gain, 24.53 in terms of pricing, and silver is currently down by about 3 cents at 17.22. Let's take a look at our technical studies. On today's show, I do want to begin by asking a question from one of our subscribers, Antonio, and he said, "Dear Gary, would you agree that we have entered Wave 4 of the cycle that started in November of 2015? If not, where are we?" To do that, I have to pull up a long-term monthly chart, and as you can see, November comes in right in this area. And so we are marking that as the low and the conclusion of the extended correction that really began as the market fell from 1900. It was a multi-year correction. So I put that as a conclusion and not when it began. What does that mean? That means that we are still within a major fifth, and as you can see, that has taken us as high as about 1700. You can look at different time cycles, but for your specific question, the answer is we exited or concluded Wave 4 in November, not begun it. I hope that answers your question. And traders, now to our current assessment of the market. If you recall from yesterday's show, we talked about the fact that what we could identify on this daily chart was this tremendous sell-off on Friday, along with this doji-like character, and that, of course, occurred yesterday, created what is called a harami cross. Harami simply means pregnant in Japanese. It is the analogous pattern to a Western inside trading day. Now, it is a key reversal bullish pattern, but cannot be taken without confirmation because it is the weaker of many of them, like an engulfing bullish or a piercing line. What we said is that on the following day, we needed to really see a green candle with a higher high and a higher low. Now, technically, we got the higher high, we got the higher low, but the body wasn't large enough to break above what we talked about as that top. And here, they're equal tops, and that's the reason that we held off, because what that tells me is that there is still a possibility for more downside retracement to finish the current correction. If we see it move past this particular price point, and I'm referring to these tops right here that come in roughly at 1650, that would change my outlook in terms of whether or not we're bullish or bearish. The other thing is that we certainly are still within and well above the 50-day moving average. That being said, as long as it maintains itself in that way, I do believe that we are in a bullish point in time, but we are still possibly within that correction. For the meantime, my recommendation is to remain neutral with no active trades. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.